Hey there, if you're building a company in the cannabis space, it's critical that you understand the market size, also strategies of successful companies in the sector, and of course, the direction the industry is going. And that is exactly why I put together this short video just for cannabis entrepreneurs. So as you see here, the legal cannabis market is expected to grow 7.7 billion to 31.4 billion in the next 3 years alone. So by 2021, it's estimated that North American sales will make up 86% of that global market. So that's $27 billion. So mostly it's going to be the US market and the Canadian market. Canada is going to be the first G7 country to legalize recreational cannabis at the federal level. Now, they've legalized medical cannabis in 2001, and in October of this year, they will now have legalized recreational cannabis. In the US, recreational cannabis is not really legal on the federal level. It's only legal on through nine different states. However, medical cannabis is legal in 30 states in the US. Now, I think all of this is really going to change when we start to really weigh the benefits of legalizing this plant. It creates jobs, brings in tax revenue, and it's being proven to have real medicinal value. Now, in fact, the market demand is forming all around the world. The rest of the world's sales are projected to jump from 52 million last year, 2017, to 2.5 billion in 2027. And a lot of this is going to be led by Latin America. So globally, there definitely have had an impact. In fact, Uruguay was the first country in the world to legalize cannabis, and Georgia was the second. And now there are over 20 countries in which cannabis is legal. So this movement really has global strength. So now how are people actually using cannabis? Recreational cannabis, that's the products using the THC, your tetrahydrocannabinol, make up about 70% of the demand. Well, medical cannabis, that's your products using the CBD, cannabidiol, are about 30%. So why this really big difference? It's because the distribution of recreational cannabis has fewer barriers. The distribution of medicinal cannabis must go through clinical trials and receive FDA approvals prior to mass distribution. Now, in fact, it was only in June 2018 that the FDA approved the very first drug using cannabis. It's called Epidiolex, and it's an oral solution that is used for the treatment of seizures associated with two rare forms of epilepsy, the Lennox-Gastaut syndrome and Dravet syndrome. Now, not only is it the first FDA-approved drug that contains substance derived from cannabis, this is the first drug that is actually approved by the FDA, that is, that can actually treat patients with Dravet syndrome. So it's not only that we're seeing medical cannabis solving medical problems, we are seeing medical cannabis solving problems that traditional medicine could not solve. So let's go ahead and shift gears here. I want to take a look at two really breakout companies in this sector, Cronos and Tilray. Cronos was the first cannabis company to trade on the US exchange when they launched on the NASDAQ in 2018. They had previously only been trading in the Canada market. Tilray was the first US cannabis company to do an IPO. Now, some will say that Tilray is really a Canadian company, but they were actually spun out of Privateer, which is a US-based investor. And in fact, at the time of the IPO, Privateer owned 100% of the company. Cronos and Tilray, when we look at these companies, they both started about the same time, about 2013, and they both raised about the same amount of money prior to their IPO, which was about $60 million. The big difference is that Cronos had $4 million in revenue in 2017, whereas Tilray had $20.5 million. Both companies sell cannabis oil and dried flowers, but in addition, Cronos sells live plants and Tilray sells accessories. So this is kind of a common growth strategy that we see on the weekly Wednesday webcast, diversifying your revenue stream. They're not just pigeonholing themselves just to cannabis oil or just to dried flowers. They're actually expanding out and doing different things. So let's go ahead and take a deeper look at the rest of their growth strategies. So with Cronos, their core assets are Peace Naturals. This sits on a 95-acre piece of land and produces their medicinal cannabis. They acquired this company in 2016. Now, on the recreational side, there's OGBC. It's a great acronym. And that covers about 31 acres of land. Currently, Cronos is growing 5,000 kilograms a year and expects to increase that to 45,000 kilograms per year by the end of this year. And they recently expanded to Israel when they partnered with Gan Shmuel to produce, manufacture, and distribute medicinal cannabis internationally. They've also reached distribution deals with Paul Boskamp. That is one of the oldest German pharmaceutical companies. In fact, they're about 175 years old. They also had a partnership with Caribbean medical distributors in the Cayman Islands. And this is really helping them expand their footprint all around the world. And in fact, Cronos is one of the largest indoor cannabis facilities in the world. If we look at Tilray, we see that Tilray operates a 60,000 square foot medicinal cannabis research and production facility with absolutely no plans to enter the recreational cannabis industry. They've invested $24 million to build a state-of-the-art European site based in Portugal. The cultivation license it received from the government of Portugal has made Tilray the very first company to legally export medical marijuana to Europe from North America. They've also partnered with Sandoz Canada to develop and distribute medical cannabis products. And this signals the very first deal between a major pharmaceutical company and a Canadian cannabis producer. This is really going to help them get Tilray products into pharmacies and hospitals across that country, of course, pending regulatory approval. That's always the caveat there. So if you don't know Sandoz Canada as that name, it's actually a branch of Sandoz International, which is the generics-focused wing of Novartis. And I'm sure you've heard about Novartis. Novartis International is the fourth largest pharmaceutical company in the world by revenue. So we see that both companies are using globalization as a strategy. Cronos has used acquisitions, while Tilray has used strategic partnerships with larger companies. So there's lots of different ways that you can learn from these companies and how they actually grew, whether it's acquisitions, whether it's going global, whether it's strategic partnerships, whether it's diversifying your revenue. And one thing I really have to point out here as we talk about these two companies is that getting into any kind of cannabis is really capital intensive. I'd say both of these companies, of course, they raised about the same amount of money, and they both had to were required to build out state-of-the-art facilities where they were sanitized and they are equipped with secure rooms. So it's not just like if you're building a software company, you just pretty much go anywhere you want to do and be able to use the cloud for your servers. I mean, when you're building these grow centers, they have to be state-of-the-art facilities. You have to be measuring the oxygen, they have to be sanitized. You have to have a security system in place because people might steal your plants. So there's really a lot to it. It's incredibly capital intensive, and not just the real estate, also the regulatory measures, the legal aspect of growing one of these companies. That's another big blow to the pocket. And in fact, there was a tough studies of 10 different pharmaceutical companies, and they chose 106 randomly selected drugs that were first tested in human clinical trials between the years of 1995 and 2007. And it showed that the estimated cost to bring a drug to market was $2.5 billion. And that's money in 2013. So I'm sure this 5 years ago, that is probably a lot more now. And the way they got to this number is it includes $1.4 billion in average out-of-pocket costs to the drug developer, and then another $1.1 billion in time costs, which are essentially the expected returns the investor would have gotten if you had gone somewhere else. If you think about it this way, when you're building a drug company, when you're developing a drug, I should say, you put lots of money into it before you get anything out, because essentially you're putting money in and you're going through your clinical trials and you're trying to get FDA approval. So it can be really expensive. And in this example, this study found it was $2.5 billion 5 years ago. I'm sure it's probably a lot more now. They also estimate that there's a cost of post-approval research and development, and that's another $312. And this involves, studying approved drugs and post-approval trials, and then analyzing those side effects, and then researching new dosing methods and so forth. So these post-approval costs are pretty much a condition of approval from the FDA. So you can't really get away from this. So if you think about it that way, it's like $2.8 billion in direct and indirect costs per approved drug. So fast forward to 2018, it's probably closer to $3.2 billion. And this is why only cannabis-based drugs that have been approved by the FDA includes the one that we talked about today. You don't see lots of cannabis-based drugs approved by the FDA because it's something that's very, very expensive. And of course, as I mentioned in the beginning, a lot of people are thinking of this as a newer drug. It's just now getting more exposure. Canada made the medical cannabis industry legal in 2001. I think they're pretty much a pioneer in that space, but other than that, nobody has really been focusing on this. So let's go ahead and switch gears. I want to talk now about the future of cannabis. So in Canada, the recreational cannabis, of course, will be legal. They have a target date of October 17th, 2018, which is coming right up. And so in the first 6 weeks of 2018, the investment was up nearly 7 times over the previous year. And also the average deal size increased from $5.6 million to $18.7 million. At the same time period, the Canadian Cannabis Index, which is the index which holds about 20 different publicly traded cannabis companies in Canada, rose 200% between January 2017 and January 2018. The bad news is to date, the index has lost about 50% of that. So that's to be expected. This is a new market, a lot of regulatory risk around it. So of course, you're going to see high fluctuations like that. So if you're building a company in the cannabis space, expect volatility. If this is not something you're comfortable, it's not the right market for you. And as this risk decreases and the market stabilizes, everything should level out. So you got to think about it that way. This is really a new category. There's lots of regulatory risk, and you just have to be able to handle that and get through the storm. And really the only thing that you can do is protect yourself, is be prepared. If you're building a company, hopefully you understand your customer avatar. Are you selling to the recreational market? Are you selling to the medicinal market? Hopefully you understand your growth strategy. How do people find you? What happens when they find you? What is the whole distribution process? How are you getting this product to them? How are you servicing them? And then, of course, who are your competitors? Who are your complements? When we talk about the growth strategies of Cronos and Tilray, we see lots of examples how they've used their complement landscape, that is the companies that work well with them, to create strategic partnerships and actually to acquire some companies. So look at your complement landscape. Which companies complement you? Which companies could you either merge with or acquire or be acquired by? So you want to look at all of that. And of course, please create a financial model, because it's a really capital intensive business. If you're going to be a grower, you have to get your license, you have to create your grow room. It's very expensive real estate. It's very high tech real estate. So it's something you have to really plan. So make sure you have a really solid financial model. And if you're going to raise capital, I estimate there's about 50 different funds that are investing right now, either directly or indirectly, into cannabis. Of course, there are funds that are, just on cannabis. That's what their investment thesis is all about. And there are other companies who are perhaps doing ag tech, so they'll go into cannabis. Or they're doing something there's a fund out there that just does any industry that's highly regulated, and they've jumped into some cannabis companies. So you're going to see a lot of creative financing, I'll call it, when you're trying to get funded through cannabis. So if you're looking to raise money for your cannabis company, make sure you really understand the investor landscape. That's so important. And of course, have a solid pitch deck and start getting in touch with those investors before you need them. Check out 30 Days of Mentoring. It's a one-on-one 30-day session designed to get entrepreneurs investor ready. We go through customer avatar, growth equation, growth model, competitive landscape, complement landscape, financial modeling, forecasting and budgeting, investor pitch deck, and of course, investor outreach. Now, enrollment closes soon, so make sure that you sign up today. You can find more information below. And if you have any questions, feel free to reach out to me. I'm always here to answer questions, and I really look forward to meeting you in class.